For all those of us who curated this, for all those of us who curated this program, it is a next leap for us to really see how small whiteboarding ideas can take a shape of reality. And for those of you who are participating as startups, definitely a very exciting journey ahead. So I am also very eager to hear Jagrati unpack compliances, governance for us today. So without taking too much of time from all of you, I will hand it over to Kushal to take the proceedings further. But very, very excited to have so many join us on the calls and so many participate with us in the journey. Means a lot to us. Huge gratitude. And beyond seed, it was not possible without your support. ICI India has just given us that extra, wind to all our wings. So together, I think we are looking at something exciting taking shape on 20th November. Let the journey begin and continue. Thank you. Over to you, Kushal.
Thank you, Miss Anuradha. Shanu ma'am, you are here? Could you confirm if Gyan sir is here for his speech?
Yes, I am here. The answer will be able to join the webinar at 11:30 a.m. He's in a meeting right now, so he's going to address the participant at around 11:30.
Sounds good. I think, Kushal, let's begin. When Sir joins, Shanu can advise us, and then we can get Gyansa to address the forum at that point in time.
All right. Thank you. Thank you, Miss Anuradha, for setting the tone so beautifully for the masterclass today and sharing with the participants the idea when it was planted and the journey that we had just begun. Today's session addresses one of most crucial yet often overlooked aspect of building and expanding a business, right? Getting your legal, tax, and compliance foundation just right before going global. We have seen promising startups with great products scramble just because of gaps in the structuring. It could be tax, it could be legal, it could be compliances. We have privilege to have Miss Jagariti Mathur with us to share the insights on how to structure your company in the best way possible before you go global. CA Jagariti Mathur is the co-founder and CEO of BeyondServices, the growth engine behind the BeyondSeed ecosystem. A qualified chartered accountant with over 12 years of experience, she leads a team of experts delivering comprehensive financial and compliance solutions to startups and SMEs across Singapore, India, and the Middle East. CA Jagriti is based out of Singapore. Under her leadership, BeyondServices has become a trusted partner for founders, simplifying finance, ensuring compliances, and enabling growth through service such as business setup, accounting, taxation, fractional CFO, valuation, due diligence, cross-border advisory, and whatnot in and around legal, tax, and corporate structuring. She was recently recognized among the Global 200 Women Power Leader 2025, a testament to her leadership impact and dedication to empowering business to grow with clarity, compliance, and confidence. So, without any further ado, let's straight dive in the session and make the most of this valuable learning. CA Jagriti Mathur, over to you, please.
Thank you. Thank you so much, Kushal, for this wonderful introduction that you gave me. And thank you so much, Anuradha, for welcoming me on board and helping us deliver this wonderful session. We are glad to partner as BeyondSeed with the ICAI Singapore Chapter. It's purely our privilege. Before we delve into the session, I'd like to introduce BeyondSeed to people so that we know, people know which organization, ICI Singapore Chapter is partnering with, what are we exactly doing. So basically, Beyond Seed is a startup ecosystem that helps early stage founders from seed to Series A. We provide right mix of capital, mentorship, execution support to our startups so that they can scale faster and they can scale stronger. We have different growth engines across to support their growth. We have Beyond Services, which is led by me. We have Beyond Marketing. We have Beyond Distribution. We have different ecosystem, Beyond Capital. We also have Beyond Influence. Basically, we give you a platform to play around and grow. We are present across Singapore, India, and Middle East. We connect entrepreneur with investors, advisors, and experts who help them to build solid business foundations. In short, our idea is to turn business ideas, good startups or startups who are part of our business, into investable and scalable businesses. So, as part of Beyond Seed, I would like to welcome all of you. And as part of Beyond Services, I would like to welcome all of you. So, let's begin with our session. I hope you all are excited for the session today. Can I start my presentation, Krishna?
Yes, please. Go ahead.
Right. Please let me know if you all can see my screen.
Not yet.
Not yet. Okay, perfect. Just give me a moment. All
You
righty.
have the share rights, I guess, right?
Yes, I think I do have.
Yeah.
We'll just see. Seems some issue. I'm not able to share my screen actually. Oh, okay, let's see. Okay, can everyone see my screen?
Yes, we see your screen. You can put that into presentation mode so it's visible.
It's actually in the presentation mode. Can you guys not see that? Oh wow, man, that's good.
No, we see the slide deck.
You just see the deck. Super. Just give me 1 second. Sorry for these glitches, guys. Just trying to make things work here.
We just get better every day.
It's Saturday. It's okay. We allowed some here and there. All right.
Absolutely,
Now,
yes.
can you guys see my screen? Just give me a moment, please.
Yeah, we see that. Yes.
Now is my presentation visible?
Yes, perfect. This is perfect.
All right. Awesome. Thank you for bearing with me, guys. So, yes, legal compliance, cross border structuring, very interesting. I think very valid in today's time. So, let's begin with our session. I hope you guys enjoy the session. So, before starting with this session, right, I would like to talk about the beautiful partnership which has been there between India and Singapore and is becoming stronger each day. So, I would like to discuss about the growing traction that we see between India and Singapore. So, right now, guys, in my opinion, I think we are witnessing one of the most fascinating business shifts in the modern industry. The rise of borderless growth, corridor between India and Singapore. So, India today, right, is where big ideas are born. And I truly believe it. And congratulations, guys, for this. I think India is growing tremendously. It's full of energy, innovation, and scale. And where Singapore, on the other hand, is where the ideas find their structure. It is where those ideas find the ecosystem, right? It's a very rare combination. It's creativity with discipline, it's scaling with scalability. So the partnership isn't just theoretical, right? It's already shaping up how we have capital, in exchange of capital, talent, opportunities, and how it's helping move across Asia. It's commendable. Today, today's session actually we'll explore what's driving that traction, what are the compliance foundations, how to sustain it, and how actually founders can tap into this synergy effectively. So, since we are talking about India and my obsession with India, as say, I would like to really focus on how India is a startup powerhouse now, right? So, let's start with India. So, currently, what we're talking about is world's third largest startup ecosystem. We have more than 100,000 registered startups which operate across sectors. You talk about fintech, agri-tech, health tech, logistics, anything. It isn't just about numbers, it's about the momentum. So I think India's young population, high digital adoption, hunger for solving real world problems have created an unstoppable innovation wave. So I think the environment really now these days in India supports rapid experimentation. They have low operational overheads, cost efficient talent, growing investor base, and values governance and sustainability over quick exits. Government initiatives like Startup India, Digital India have brought policy structures to what used to be a chaotic space, actually. So, as a result, a startup culture that's global in aspiration but uniquely Indian in execution. So, well done, guys, for being part of Indian growth ecosystem right now. And now let's talk about Singapore. How Singapore is the strategic edge for Indian ecosystem, for Indian startups, right? So basically, when these Indian ideas mature and they need a trusted gateway to the world, Singapore actually becomes their natural next step. The tax structure is really designed for growth. We have a flat 17% corporate tax, there's no capital gain tax, and we have a very strong double taxation avoidance agreements across the globe. So Singapore is really strong that ways. But beyond numbers, right? It's the real strength of Singapore lies in its reputation. So investors trust Singapore registered entities because of their governance, transparency, dispute resolution systems, and they are world class. The country's location is at the heart of ASEAN. So basically, it gives you an unparalleled parallel global access. So when you incorporate here, you just don't register a company, you gain instant credibility. So that's Singapore for you. But since we are talking about Singapore and India, in detail, we appreciate everything. But what is most important and what really has made Singapore so successful is its legal and compliance structure. And that's what we are going to talk about. We are going to talk about Indian legal compliance structure, its foundations, and we are going to talk about Singapore's legal and compliance structure and foundations. However, I think that since most of us are Indians and are already present in the Indian ecosystem, we would focus more on Singapore's strategic growth so that it's more helpful for all those who are present, right? But at the same time, we'll focus on what is important for the founders to thrive and grow within the Indian ecosystem so that, this webinar and masterclass really is helpful for all of us who are present here. So let's begin. Okay. Let's talk about Indian legal compliance. Okay. What is the foundation? Basically, compliance in India, I think, is really misunderstood sometimes. Whenever we talk about compliances in India, the first thing that comes into our mind is bureaucracy. Okay, everyone fails to understand that it's actually the foundation of credibility. Why do you think people come to Singapore today? Because of its effective compliance and legal structure. And it's so sad that in India we run away from those compliances, right? We say that, oh, it's so tough, we're not able to manage it. So trust me, it's really important to be compliant. Okay. So now what we see is that every stage you talk about incorporation, post incorporation, ongoing filings, it signals to the investors and regulators that your business is disciplined. Okay. So if you're not compliant, trust me, you're not sending a good signal to the founders out there, to the investors out there, for your business. Okay. So let's talk about Indian legal compliance system. Okay, there are certain things. Let's talk about incorporation because what we see is that we are naive when we are incorporating a business and we really don't know what is required to be done, what are the filings which are required. So let me give a very brief overview. Okay, so you need when you register for your MCA, right, or you go to your filings like Spice Plus and stuff, you need to make sure your memorandum of association, your article of association lay the complete groundwork for your business. Okay, you also need to file within next 15 to 30 days your forms like your INC 28, get your board meetings in order. You have to make sure that your GST registrations are in place. Okay, and the ongoing rhythm where you have your annual filings, FEMA reporting, tax returns, labor laws, all these things, right? You need to make sure that you're working on them and you are aware of the rules and regulations which are applicable to your business. So starting now, you think of compliance as not a paperwork, but it's like an audit trail of integrity. For all the Indian startups or the SG startups, we need to make sure that our compliances are in place. Okay. So now, since we are talking about compliances, let's understand compliances a bit in detail. From Indian point of view. Okay, so India has four key regulatory bodies. We all are aware of that. Most of us maybe are aware of that. It is Ministry of Corporate Affairs, Reserve Bank of India, CBDT, and CBIC. Okay, so what all filings are required to do at MCA? We need to file or our AGM related information like your financial statements, when your AGM, your annual returns, your board meeting regulations, everything is required to be filed with MCA. Then we talk about RBI. Okay, so RBI monitors foreign investment flow and FEMA reporting. What all filings are monitored by RBI? It's your FCGPR, it's your FCTRS, your annual FEMA return. All these compliances are managed by RBI. Okay. Then comes your CBDT. Your CBDT governs your direct tax and transfer pricing compliances. So your corporate tax returns, your tax audit reports, your advanced tax queries, everything falls under CBDT. Then we talk about CBIC. CBIC administers your GST and indirect tax rules. So all your GST, GSTR, annual GST, everything is managed by them. Okay. Now let's look at the challenges. The challenges that we face when we are filing these forms. So let's see, as a founder, right, you may be aware, you may not be aware of these compliances. Mostly whenever we talk to the founders, we realize that whenever we talk to them about compliances, the answer that we get is, oh, my chartered accountant would know whether we have done it or we haven't done it. See, this is not the answer that you should give, because sometimes we have seen that or some your compliances are amiss, or sometimes your CA has forgotten to file a couple of things, and your business is your responsibility, not your chartered accountant's responsibility. You have to work in sync with your CA to make sure your compliances are in order. And I'll tell you the challenges that you face with these compliances. Let's talk about annual filings, your incorporation and your annual filings with the MCA. We have seen challenges that we face right here, that your digital signatures has expired, or your MCA forms portals do not work on time, you have missed your AGM deadlines, you have late filing penalties, and then you come back to your CA and ask why all these things. And everything, we have an answer to the question, but the point is that, could these things been avoided in advance? Yes, they could have been, if we would have been a little more vigilant with our compliances, right? Now let's talk about our RBI compliances. Valuation certificates. Classic example is that valuation certificates are not submitted on time. There's a misalignment between shareholders' records. Banks are requesting additional KYCs on the last minute. See, these are the things that we face. But can these be avoided? Yes, they can be. There are ways to avoid these challenges that we face at the end moment. And trust me, um, we see a lot of founders struggling with these things later, because they are like, oh, I think we missed filing this, we missed filing that. Please make your checklist, make sure your compliances are in order. If not, talk to your CA, get these things resolved much in advance than waiting for the last minute, right? Okay. Now let's talk about the challenges that we sometimes face with CBDT filings, right? Your corporate tax and transfer pricing compliances. Sometimes you have classic issues like incorrect PAN. You have delayed foreign remittance, TDS filing, your TP documentation is not in place, or your documentation was prepared after the deadline, instead of being concurrently prepared. So we need to be aware about these things and make sure that uh, we do these things much in advance, right? Then let's talk about challenges that we can face with the CBIC. Classic GST challenges. Constant portal updates which can cause like filing errors, input tax credit reconciliation gaps. There are delays from interstate branch registrations and etc. So basically, let's be proactive and build a compliance culture, a compliance calendar. You should have this compliance calendar ready with you the moment you incorporate your business, so that you are aware what is coming, what are the things that you need to do, so that you avoid those penalties and delays. Okay. So now we have talked about our Indian compliance system. Let's talk about our Singapore compliance. Okay. Okay, so please don't judge me. I'm a little biased about Singapore compliance excellence, because I've been part of both the frameworks, and Singapore does makes your life a little easy. So let's talk about Singapore's legal framework. Okay, so basically, Singapore's legal ecosystem is often described as clean code for business. It is efficient, readable, and reliable. The governing bodies for Singapore ecosystem is ACRA, IRAS, and we have a CSP Act for corporate service providers, which help you maintain high AML and CFT standards. Okay, since we are talking more on the Singapore lines, let me make you understand what is ACRA. ACRA is a regulatory body which oversees your incorporations, annual filings, and it is all done through a very streamlined digital process. Same with IRAS. IRAS is your Indian Revenue Authority of Singapore, which manages your tax declarations, startup exemptions, everything, and you can find all the details on the website. It is very clearly written, and it is all accessible digitally, and all the filings are done digitally too. Recently, what is the CSP Act? Recently, we have had changes to the CSP Act. So CSP Act is basically a code of conduct which governs all the corporate service providers in Singapore. And it is our responsibility to make sure that there's a high AML and CFT standard. That is, we have to make sure that and keep check on anti-money laundering transactions, which can possibly be routed through Singapore ecosystem. Okay, let's delve a little deep into Singapore compliance timelines and KYC. Singapore compliance timeline. So let's divide the Singapore compliance into three parts. First is your incorporation stage, your post-incorporation stage, and your ongoing compliance. So let's talk about incorporation stage. So what is the expected timeline, right, to incorporate a business in Singapore? The expected timeline to incorporate a business in Singapore is roughly 0 to 7 days. Ideally, it's 7 days. How does the process works? Okay, so first, what you need to do is you have to submit all your KYC documents to the corporate service provider who's helping you establish your business here in Singapore. Okay, but before that, let's talk about what are the requirements to set up a business in Singapore. You need a local director. Okay, and you need a corporate secretary, a registered office address to open a business in Singapore. What are the steps? First, you need to submit all the KYC documents. KYC documents is copy of your passport, electricity bill, or etc. to your for an individual shareholder, to your corporate service providers for all the shareholders and directors of the business. If you have corporate shareholding, then your KYC requirements are different. Okay, once you've submitted the KYC documents to your corporate shareholder, then they sent you a set of forms which are required to be filled, which is actually nothing but the forms and the registers which are required to be updated to ACRA, which is your RORC, Register of Registrable Controller, which is very important, your Register of Nominee Shareholder, Nominee Director, etc., which is required to be maintained at ACRA level. Once you have signed that, and once your PubSec has given a go-ahead, has done your KYC clearances and all, your company is set up. Once the company is set up, the next challenge that comes your way is opening a bank account. So for that, there are different banks who you can approach and open a bank account in Singapore. However, the range can differ from 1 week to 2 to 3 months. It really depends upon the bank that you're approaching. We'll discuss this in detail later, but yeah, that's a challenge that you face here. Opening a bank account can sometimes be challenging. Okay, so now we have discussed about the incorporation, right? Let's discuss about the post-incorporation formalities. So when we talk about post incorporation formalities, what you need to do is you need to receive your share certificates from your service provider, okay, from your corporate secretary. Your corporate secretary need to issue you share certificates, need to file your first board resolution for appointing officers. You need to register for GST if you think your turnover would by any chance exceed $1 million or above in the first year of operation itself. You should register for GST here in Singapore. Okay, you should apply for any sector specific licenses if needed immediately after your incorporation, right? So these are some of the post incorporation filings that are required to be done. Now, when we talk about ongoing compliances, your ongoing compliances are you need to file your you need to hold your AGM within 6 months from end of your financial year. Okay, within 1 month from conducting your AGM, you need to file your annual return with ACRA. Okay, so basically within 7 months from end of your financial year, you need to file your annual return with ACRA. Within 3 months from end of your financial year, you need to file estimated chargeable income to IRAS. And by 30th November, you need to file your corporate tax return. So 30th November following the year in which your financial year ends. For example, if your financial year end is 31st December, then by 30th November 2025, you need to file your corporate tax return. Then if you're GST registered, you have quarterly GST submissions which are required to file. And there's something called CPF here in Singapore. So if you have employed any local or a PR here in Singapore, you need local, that means a Singaporean or a PR here in Singapore, you need to register your business for CPF and file CPF for those people who are employed by you. Okay. Now, there has been changes to our CSP Act that I was talking about, and a new regulation has also come up that every year there'll be a fresh compliance review, annual review, which will be done on all the shareholders and directors of your business. What do you mean by that? A KYC check will be done annually on all the shareholders and directors of the business registered in Singapore. uh, on a mandatory basis, and depending upon the risk involved in the business, these reviews can be done on a 6 monthly or a monthly basis if a politically exposed person is involved in the business. Okay. Now let's talk about the challenges. As we were talking about the challenges, I think the only challenge that you see in Singapore is basically opening a bank account in Singapore. This is quite a time consuming process. So yeah, this is something you need to take into consideration when you're setting up here. And other challenge that we see is that sometimes, right, the directors, they miss out on the filing deadlines. For example, you have appointed a director or a nominee director and he missed out on your filing, then yeah, Singapore takes these offenses very seriously and there are heavy penalties which are imposed. So you need to make sure again that you have your compliance calendar prepared in advance if you are dealing with if you have incorporated any entity in Singapore. Especially Singapore doesn't take its non-compliance in an easy fashion. They have heavy penalties involved. Okay. So now, since we have talked about the India and Singapore compliance timelines, how things work, what is the legal and compliance framework here, let's talk about what benefits do Singapore and India actually both give to the startups which want to incorporate their business in Singapore as well as India. Since we talked about Indian ecosystem, right, and the compliances first, let's talk about the Indian startup support schemes. Okay. Okay. So Indian startup revolution is actually driven by policy as much as people. Government's initiatives. We have government initiatives like Startup India, IFSC, Gift City, Digital India, which form the foundation of a structured, innovation-driven ecosystem. So let's understand very briefly what are these support schemes that we have. Okay. Startup India. So basically, what is the objective of Startup India? The objective is to simplify formation, reduce compliance burden, and create funding access for all the startups. Okay, now what are the benefits? Benefits are you get a 3-year income tax exemption for first 10 years, 80% rebate on patent filing fees, angel tax exemptions, access to 10 crore fund of fund where SIDBI, certification for 9 labor and environmental laws, etc. There's an eligibility criteria to apply for this Startup India scheme. And the eligibility criteria is you should be registered as a private limited LLP or partnership within last 10 years. You should have a turnover of less than 100 crores. Your product or process must demonstrate innovation or social impact. Okay, that's about Startup India. Now let's talk about IFSC Gift City. Okay, the objective of Gift City is to enable global financial operations from India under relaxed FEMA norms. What are the benefits? Benefits are 10-year tax holiday, 100% foreign ownership allowed, FEMA and RBI relaxations for capital movement, and what are the eligibility and registration criteria? You should incorporate under gift SEZ. You should submit your detailed business plan, shareholding, KYC documentation. You should have approval within 45 to 60 days depending upon the sector. Now let's talk about Digital India. Okay, the objective of this scheme is to empower digital innovation and infrastructure adoption. You have benefits like grants under Digital India for deep tech startups, access to Meghraj cloud and government marketplaces, mentorship and data infrastructure. Any registered tech-driven startup or SME in India can take this benefit. Now, so all in all, there are 3 initiatives which build a pathway. It is Startup India fuels innovation, Gift City opens global access, and Digital India empowers digital infrastructure. Together, they anchor India's position as a startup superpower. Now, let's talk about Singapore's startup support system. Okay, so just like India, Singapore also have different grants which are available to the startups who register here, to the businesses that register here. Okay, so we have a startup SG founder grant. So basically, the objective of this grant is to encourage first-time founders with innovative business ideas. Okay, what is the benefit that we get under this? The benefit is that you get a grant of $50,000 on a one-on-one co-matching basis. For example, if you raise $10,000, you receive $10,000 from Enterprise Singapore via accredited mentor partners. Okay, so you have these accredited mentor partners under this grant. You can go to them for advice also later. So basically, they are happy to mentor you and support you with the funds. Second grant the eligibility for this grant is that you should have at least 30% shareholding by any Singapore citizen or a PR. First time entrepreneur with a viable, you should be a first time entrepreneur with a viable business model. Your company should be less than 5 years old and less than $100,000 of paid up capital. Okay. The next grant that we talk about is Enterprise Development Grant. So Enterprise Development Grant actually support SMEs and startups in innovation. Okay, innovation, process improvement, and internationalism, basically. So what are the benefits? You get up to 50% funding for the project cost, basically, be it consultancy, software, IP filing, market expansion, anything. You get 50% funding of the total project cost that you have. Okay, the eligibility is, again, you should be a Singapore registered and operating a business in Singapore with at least 30% of local shareholding. You should be financially viable for project execution. Okay, the approval of this grant usually takes 6 to 8 weeks. Then we have Market Readiness Assistance Grant. What is Market Readiness Assistance Grant? This is a very beautiful grant actually for the startups here, registered in Singapore basically, because this helps you expand in global market. What is the objective of this grant? This is basically the objective is to help startups expand into overseas markets. What is the benefit which is offered? So up to 50% support for the market entry activities, which is capped at 100,000 per market per year. So basically, as a startup, if you want to expand in other markets, per market entry, you get 150% of the 150% of the total of your market entry activities, and you can get support of up to 100,000 Sing dollars for those activities. So I think this is a beautiful grant. The eligibility is that you should be a Singapore headquartered company and your turnover should be less than $100 million, or you should have less than equal to 200 employees. So I think this is the grant which really can be used by most of the startups who register their businesses in Singapore. The other grant that we have here is a financial sector technology and innovation grant. So basically, the objective is to support fintech innovation and adoption of emerging technologies. It covers up to 70% of your project cost for AI, blockchain, cybersecurity solutions. So any MAS regulated entity or registered fintech company based in Singapore can apply for this grant. So we'll focus on these four grants for now. We can discuss them later in detail if you want. So basically, this is your grant ecosystem in Singapore, and we can really make use of these grants and expand our presence in other geographies from Singapore. Now, let's talk about cross border structuring. Okay. So if you see, I have named this slide as cross border structuring the gold standard. Okay, now why is it a gold standard? I would say that the most efficient model, in my opinion, for India Singapore growth is the dual entity structure. What do we mean by dual entity structure? What we mean is that you should have your headquarters based out of Singapore, and your delivery and everything should happen, your employees, your development, everything should happen in India. Okay. So basically, a Singapore holding company, you should open a Singapore holding company which should manage your IP, your fundraise, your governance, so that it offers complete transparency to the investors, and your Indian subsidiary which handles your execution, revenue generation, and local compliances. Okay, together I think they align under the India Singapore double taxation avoidance agreement. So it is a best structure to optimize tax and reduce friction. Okay. But the catch is that both entities should have real operations, directions, and contracts that reflect genuine activity. Investors can tell, investors can actually tell which structure is just on paper. And trust me, sometimes it hampers your funding. So basically, in this, what you can actually do, if you're actually planning to expand into Singapore market, what you can do is you open a company here, have some operations here, have your local director based out of here, your agents, everything run out of here, and keep your IP here in Singapore. Make sure that your execution, everything is managed there. And you really need to decide where you want the money to flow in. Ideally, technically, it's best if you want to expand globally to have your money and your funding come into Singapore, because it's the cleanest structure, most trusted structure, and investors would be willing to invest in a Singapore holding company for your business. I'm not saying they're not willing to invest in India, because I think there's a lot of trust in the Indian operating subsidiaries, and investors are also willing to invest in your Indian subsidiary. But the only thing is that sometimes compliances take a little longer in India, which can be a deterrent. So it is actually on you to decide how you want to manage this structuring. In our opinion, have a holding here and keep your subsidiary there. That's a better way to expand into global markets if you're looking for global expansion, that is. Okay, now let's talk about what are the real challenges that we face in cross-border expansion. Okay, so as glamorous as it sounds, right? That okay, we are going to expand across the globe, we are going to manage everything, grow our business. Yes, We can do all those things. But there are certain challenges that we have to face, and we have to be ready to overcome those challenges. First is, especially if we talk about Singapore and India, banking and fund movement challenge. Okay. From Singapore point of view, your banking can be challenging because your bank account may take longer. But once you have your bank account and your AML and CFT checks are done, it's very smooth. The infusion of funds, execution, everything, it's a cakewalk. You don't have to worry about that. But if we talk about India, right, from India point of view, we have India FEMA filings, which is FCGPR, FCTR as per transfers, which needs to be done timely. Otherwise, it can create problems and it can go in loops. The issue can go in loops. So make sure that you have your paperwork and everything ready before you apply for your FCGPR. You have created your firm's account. You have asked for the KYC in time. Your SWIFT codes are proper. You know what the process is, and if you don't know the process, there's some profession who's helping you to do the complete process end to end, and you meet the timelines. So technically the timeline is within 30 days of share allotment, but we usually see that there are delays because founders are not aware of the process, or there are certain issues they don't have their firm's account and stuff. So make sure that you do these things much in advance so that this process is smooth. Okay. So, and actually, if there's any delay in share certificates or valuation reports, or there's FCGPR or delay in FCGPR and stuff, there are penalties which you have to pay, for these delays. So let's try and avoid the penalty, right? Second is how it's basically misalignment in the structuring, shareholder and structuring of the business, misalignments in that. So sometimes founders, right, they fail to mirror the shareholding between India and Singapore. They don't know how to do, what to do, what are the misses. So basically, differences in directors nationality or class, share class, can actually create compliance conflicts. We need to make sure who will be the directors in both the businesses, who would be what is the nationality of the person that you're onboarding in India and you're onboarding in Singapore. What kind of structure do you want? Do you want 100% subsidiary? Do you want an associate? What is the exact structure that you're looking at? So basically, sometimes these misalignments can be a pain point, right? Now, the classic one actually is the fundraising delay. And we get a lot of questions on why my funds are being delayed. So, as an investor, right, we need some assurance when we are giving the funds, and there are certain compliances which are required to be done before start in funds can be released from the investor. And the classic one is due diligence. If you fail the due diligence, you do not have your audited statements, your board resolutions are not in place, or there are challenges, you do not clear the due diligence and the CPs attached to it, trust me, your funding will be delayed. So what you really need to do is, before you go for funding, right, especially for a cross-border transaction, if you have a foreign shareholder coming in, then you really need to make sure your compliances are in order, right? You really need to make sure that you have your audited statements ready. You have do a pre-DD exercise. Actually, we always suggest do a pre-DD exercise. Just anticipate what are the things that could be required by investor while conducting a DD on you. So if all these lists and checklists are made, this process won't be delayed. Your fundraising will be smooth. You won't face any issues there. So basically, if we talk about this, what are the practical fixes, right, that we can do? As I said, maintain a master compliance checklist linking both the entities. If you have an entity in Singapore, if you have an entity in India, make sure you have your compliance checklist ready. You have a person who's monitoring that checklist and making sure that compliances are done. just do your 6-month mini due diligence, as a founder, that, okay, is there anything that is needed from my side? Are my compliances in order? Is there any issue which I foresee which needs my attention? Make sure your valuation certificates are ready on time and your FEMA filings are aligned. Most of the times this poses a big problem, that the valuation certificates and the FEMA dates where you are doing your filings do not align. Then you have to get a revaluation done and this and that. So make sure that you have your filings in order. You've got your valuation certificates on time. Okay. And trust me, I would like to say that preparation actually is cheaper than correction. So it is always better to preempt compliances than later on, take corrective actions for any mismatch or any missed out filings or stuff, or any missed out compliance. So be proactive. Okay. Now let's go to our next slide, okay, which is common founder challenges. So, if we talk about common founder challenges, right, this is a very interesting landscape that I see. So, right from inception of the business to running the business, we see that founders face a lot of challenges. Okay, and what are these challenges, and what is the reason for these challenges? Common challenges that all the founders face are they won't have their documentation in order. They would have director residency discrepancies. They the founders really don't know, what are the source documents that are required to be filled and filed. They won't know the exact what are the basically documents, like if they have any missing board resolution or they have any incomplete registers, what are the regulatory red flags. And this is what I request all the founders, right, to work on. Just make a list of those regulatory red flags and delays, right, that you see. So if we talk about these regulatory red flags and delays, let's talk from a Singapore perspective. For example, if you want to incorporate a business in Singapore, what do you need? It's very clear. You need your KYC documents, you need a local director, you need a registered office address. And in KYC documents also, there's a complete list of documents that require that. Okay, I need your copy of your passport, I need your bill. If you're a corporate shareholder, I need your, if we talk about from India perspective, I need your MCA profile, memorandum and articles. So make sure you have all these things ready. Go and ask the person who's helping you that, okay, what are these things that you need from me? Prepare a separate file for these. Don't wait for the last minute. Director residency requirements. Sometimes we have issues like, okay, I have two directors, I don't have a local resident director. Now what? You have people who can help you with this problem. There are people who are willing to be part of your system. Who are willing to be your nominee director. But at the same time, you have to make sure who's the person who you're onboarding. So be careful about that. Make sure that this person is actually present in Singapore, who you're appointing as your local resident director, and not just a pass holder. It's not allowed anymore. You should be physically present in here. Then there are documentation errors, like your passport, your basically your board resolutions won't match. Your MON AOA won't be proper. You have missing details. So these things just try and avoid. They are entirely avoidable through proper planning, clear documentation, and working with advisors and experts who can really help you maintain this. So let's try and work towards being more compliant and more proactive. Okay. And now let's talk about fundraising stage. Let's talk about fundraising stage from India perspective. Okay. So, for example, right, you have an organization who's looking for funds, an Indian organization looking for a foreign investor to be onboarded on the system. Okay, what are the pitfalls? And what are the issues that we usually face? Again, I think we have talked about it a lot during the whole presentation. Your FEMA filings, your unclear shareholder agreements. Yes, that's a classic case. Sometimes the shareholder agreements are not clear, they are not drafted properly, which creates investment uncertainty. Sometimes there's a deadlock between the founders which cannot be resolved because of these unclear shareholder agreements. There are valuation inconsistencies, there's poor documentation hygiene. So all these things, right, they are standard pitfalls. I'll tell you, I have a classic case, and I have a startup. We've recently helped one of our startups, and the issue that we helped them resolve was their compliances were not in place since say 2022 onwards. They did not do their fundraise compliances properly. We had to go back and revise all their PS filings. We had to go back and do all the agreements again. They did not have proper shareholder agreement. Their capital structure was not in place, and because of this, their funding got considerably delayed. And it's a recent example that I'm giving you, and it could have been clearly avoided if they would have paid little attention, or would have taken an advice from a person, or from a you know from a qualified person actually, who could have helped them do proper filings, prepare complete documentation, get everything in order. And the process, their funding could have easily been we would have easily funded them, six would have easily advanced 6 months or 8 months. We would have easily funded them 8 months before, but due to these issues, and we had to resolve these things for them, their funding got delayed by 8 months. And I think for a startup, 8 months who's actually looking for funds, 8 months is a considerable delay and can considerably hamper the growth. So again, I would like to say, guys, please focus on your compliances. Please focus on the legality of your documents. Focus on the complexity and the ease with which you can do your cross-border transactions, and have a credible partner who can actually help you with these things. Okay. Now I think I'm on end of my presentation. I would just like to, give you a few pointers on what you can do. I think the best thing would be build a digital data room for yourself. What do you mean by digital data room? Just have one drive where you put all your incorporation certificates, registers, accounts, key contracts, regulations, board minutes, etc., so that you're ready whenever you need this information. Reconcile your cap table. Ensure that your share certificates, PAS3s, ACRA filings, registers, they all match perfectly. There's no mismatch signals, which can be posed as a governance risk later. Verify your regulatory filings. Make sure that your FEMA, ACRA, ROC tax filings are all filed, and you have the proofs of the submission report with you. Make sure that you have standardized contracts, you have copy of your agreements with you, with assignment, with IP clauses, clear entry and exit structure. Everything is signed and dated and governed, and defined, and uh, governing law is specified there. So basically, as you say correctly, as it's mentioned right here, due diligence is not a hurdle, it's proof of your discipline. When you control your documents before the investor arrives, you control the narrative and shorten the funding cycle. And that's so true. If everything is in order, you have your investors' confidence, your money comes in easy, right? So just be more diligent, make sure your legal and uh, compliance documentation is in place, and uh, it'll be easy for you to expand your business geographically. So thank you very much. Um, I would also like to say that we have this free consultation, a 30-minute consultation that we do for any founder who wants to do a pre-DD audit with us, or want to understand the compliances, or wants to explore cross-border structuring, understand the legalities. Please feel free to book this session. We have a Calendly link there, and we'd be happy to guide you, to help you. I would just say thank you so much. If you have any questions for me, please feel free. Kushal, over to you.
Wonderful, wonderful, Jagriti. Thank you so much for such an insightful session today. We appreciate how you highlighted not just the legal and compliance aspects, but the real world risk and guidance. And I'm sure the anecdotes that you have added that are adding so much depth to the seminar as well. For the participants, our trainer Jagriti would still be here. Feel free to raise your hands or type your question in the Q&A box. We will take every questions that comes. We do have time, and we would like to help all our participants, founders, to clarify the questions with our trainer while we are still here. So feel free to type it out or raise your hands using the in webinar button, and we will take the questions one by one. We are over 200 participants currently. Please do ask questions to Miss Jagriti. Okay, we also have CA Gyanchandra Misra sir here in the call. So before we take Q&A, if you allow me, Jagriti, I can introduce Gyan Misra sir, and then we can hear him directly for the NEXTLEAP program. CA Gyan Chandra Misra sir, can you hear me? Can you confirm if you can hear me? Then I'll speak for your introduction.
Yes, Kushalji. Good morning. I can hear you.
Good morning, sir. Happy to see you on call with us.
Thank you. After a long time.
A pretty long time.
Yeah,
I'll just read up your introduction for the benefit of all our members or participants who are joining. Then I'll invite you for the welcome speech. All right. Apologies for the brief interruption, but we'll be right back in the Q&A. We have just been joined by CA Gyanchandra Misra sir, who is a fellow chartered accountant with over 26 years of professional experience. I just celebrated my birthday and I'm just counting okay, how old I was when sir qualified his chartered accountancy. A commerce graduate, law graduate, and qualified insolvency professional. He is also an associate member of Institute of Company Secretaries of India. His dedicated journey with ICAI began at the Ghaziabad branch of CIRC, later extending to larger Central India Regional Council. And today he serves as a Central Council member for the term 2025 to 2029. In his second consecutive term, he is the chairman of Insolvency Valuation Standard Board and the Committee on MSME and Startup, and as well vice chairman of the Peer Review Board, while also serving as the director additional at the Indian Institute of Insolvency Professional of ICAI. A distinguished speaker, he has addressed numerous forums on company law, the Insolvency and Bankruptcy Code, standards on auditing, and new professional opportunities for chartered accountants. Founder of the Gyan Ki Baat Foundation, he actively promotes knowledge sharing, mentorship, and social empowerment, guided by a vision of a technologically advanced and global respected profession. He continues to inspire the CF fraternity through his leadership and service. Let's hear him directly. CA Gyanchand Misra sir, please unmute yourself and address the gathering today. We have 200 plus gathering waiting to hear from you.
So thank you so much, Kushalji, for such a wonderful, generous introduction. and of course, Jagariti Madam, who is speaker of today's session, Anuradha Madam, Pratima, and of course, Shanu, Secretary of the Committee, and all the respected participants. Good morning to one and all. Indeed, it's a great pleasure to me to join you in today's program, today's session. In the last session, we could not join that because I was traveling at that time also, and today again I am traveling. But since I got this opportunity to interact with the professional brothers and sisters, so indeed it's a great pleasure. So friends, as we understand that this series of the program is going on for the next leap, and today's topic is basically legal compliance and cross-border structuring. So this topic is truly very important because to understand the legal framework of any country for the purpose of business and to adhere the same is very important. And so I understand it very well that the members and delegates who have joined certainly have gained from the wisdom of our speaker, Jagariti Madam. And friends, let me tell you two important things with respect to the compliance and legal framework. Nowadays, non-compliance is much more costlier than the compliance cost. So to comply with any law of land is very important, not only to, for the purpose of legal framework and legal compliance, but also to make a good track record in the eyes of the lawmakers, to have a better, approach towards the various facilities, various subsidies, loan schemes that the governments are providing. That is also been given based on the track record with respect to the compliance that the business organizations are observing nowadays. So, with respect to, very importantly, I was just listening to Jagriti regarding the cross-border structuring. So, I understand it very well that both the countries, Singapore and India, they are certainly sharing so many diplomatic relations and so many, cross-border incentives are also there where the people can do and start the business. With respect to the startups and MSMEs, of course, the Startup India and so many programs of Government of India with respect to promote the MSMEs, not only with respect to their products, but also with respect to their funding, their subsidy, their hand-holding, their compliance, their legal framework, all these things the government of India is promoting, and so many, technological support is also being provided by the government through various organizations. So to take ahead the business ecosystem in the country, both the countries, I will say, rather I will say all the developed countries and developing countries, the government is eyeing to have better and more focused business units in their country. That's how we are expecting that in coming time, so many things with respect to compliance and legal framework, ease of doing business, and very importantly, growth of the ecosystem of the business in the country that will be promoted. More than 32 crores people are employed in MSME and startups, which is almost one third of the total population of the country. More than 3 crores of MSMEs and startups are doing business in GCC. So, friends, it's time to come forward, make your brand, make your business, and take it to the global league. And this, especially this series, which is we people are attending, this is not just to promote the business. It's to promote hand holding of the business. Here is how the people can extend their cross-border transactions in order to make them big. So my compliment to Singapore branch for taking such a great initiative, where not only startups of Singapore, but of course startups and businesses of India have been collaborated, and this collaboration is not going to stop here. I'm sure about it that such program will be done in future also. I'll request the Singapore team of the institute to kindly get connected to the ICAI head office for such more programs, so that members of the institute along with the other business units and organizations, they can take the benefit of such collaborations at large. So without taking much time, I once again compliment to Singapore, ICAI, and of course to ICAI India. And I'm really thankful for giving this opportunity to interact with the participant, of course, to the dignitaries of this program. Thank you very much, Kushalji, and of course, Jagariti. It's indeed a great pleasure to connect to you.
Thank you very much, CA Gyanchand Misra sir, for your inspiring address and sharing your insights. I think your words truly remind us of the larger purpose behind the next leap, to strengthen the bridge between professionals, entrepreneurs, founders, and institutions across India and Singapore. Thank you very
Yes.
much for your presence, sir.
Thank you.
We'll now move on to the Q&A. There are some questions that has been raised, so I'll read out those questions, CA Jagriti, and then we can answer those one by one. The first question is from Shivam from NutriLeaves, one of the cohort startup that we have. The question is this means for foreign funds funding, the cross-bordering structure has to be in place, means you have to have a Singapore holding company.
Okay, first of all, I would like to thank Cancer for the wonderful words of wisdom that he has shared with us. And thank you, sir, for showing this confidence in us. Okay, now let's get back to the questions. Okay, so your question, right, whether you need to have a Singapore holding company, Shivam, the answer is not necessary. Okay, it's not necessary that you should have a Singapore holding company to have funds. Okay, if the fund that you are part of, there are two ways of getting funding. Okay, one is that the fund that who's investing in you already is investing you through an SPV. If the fund is investing into you through an SPV, then a Singapore fund can directly invest into you. You don't need not have a holding company in Singapore. That's perfectly all right. Okay, the second way definitely is to have a holding company here. It is a cleaner structure, I would say. Where fund transfer becomes a little easy because it's a Singapore to Singapore transaction. But to answer your question, no, it's not necessary to have one. If a Singapore-based company is investing into you through an SPV, it's fine. And most of the companies now, if they have a global presence, they can also invest through their funds from from India to into your business. So there are multiple ways of getting this done. What you need to understand is what fund you are a part of, what are the companies that VCs that you are approaching, and what is their presence across the globe. So this can be done in many ways. It's not necessary to have establish a business in Singapore.
Thank you, Jagriti. Next question is from Venkata Subramaniam. Opening bank account seems to be very tough. How do we overcome this? I think that's the question. Can be repeated a number of times.
Okay, so Venkata, I would say a very apt question, and we have been dealing with this question day in and day out when people ask us, okay, how to do this? See, as I told you, there are different banks which are available who are open to who have very simplified processes. So what we really suggest our clients sometimes are that you start with a fintech bank because their process is quite simple, but also validate the custodian bank behind it. Opening a bank account with the fintech bank is simpler. Start with that, and in parallel, process your application with banks like if we talk about in Singapore, turns up with DBSs and OCBCs and stuff. So uh, start with a smaller bank, start with a fintech bank, where start with the bank which has easy processes, and then move on to different banks. That's what we suggest. Rest is all up to the person who's opening a bank account. It's I would say it's not something we recommend. This it's not something that you really need to follow. It depends upon company to company and their approach.
Thank you, Jagriti. Next question is from Mr. Akshay Mehta. What would be the difference if we incorporate a company in India as a Singapore subsidiary, and if we ask the promoter to hold shares directly in Indian company?
So, Akshay, I don't understand the purpose because this question is a very subjective and purpose driven question, right? So, what is the purpose? By purpose, I want to ask, is the purpose global expansion, or is the purpose of business getting, you know, little amount of funds to support your business and stuff? If the purpose is global expansion, then I would suggest have a Singapore holding company rather than an Indian holding company. I'll tell you why. Because first, if you have a Singapore subsidiary, your compliances will increase. Then, if a shareholder is if an shareholder has to have shares in an Indian company and it's a foreign shareholder, then compliances remain the same. So it doesn't solve any problem, right? They have to go through the compliance, and initially if you just want lesser amount of funds to for operations or start business and stuff, then Singapore subsidiary can still work. Otherwise, it can pose problems at a later stage when you want to expand and stuff. So if you really are looking for expansion, have a cleaner structure in place now. Have a holding as in Singapore, and then have a subsidiary in India. But it actually depends upon what is your vision, what is the purpose. It is actually a purpose driven question, where what is the need of the hour, requirement of the business, and then actually we'd be able to answer this question in a better way. It is a very general reply that I've given you. Unless I understand what are the requirements, I may not be able to guide you in a better way, because there are a lot of other elements involved while taking this decision. Whether you want a Singapore holding or a Singapore subsidiary, it's kind of subjective, I would say, not a general thing.
Thank you. I would also like to read that once again, that any participant who want to come live and ask questions, please feel free to raise your hand. We will promote you as a panelist, and you can come directly to ask your question. There is not a question, but a comment from or compliment from Mr. Gopal Krishna Gupta saying, excellent presentation, madam. The next question is from Ms. Barkha Agrawal. Singapore is generally known for its high rental costs. How can new founders navigate this aspect while trying to open an office in Singapore?
Shared workspaces. Plain and simple answer is shared workspaces. See, again, it comes down to how and where you want to open your business, which area. If you talk about Singapore, costs are not same across. Second, you can also choose your office space. No, you want an actual office space, a virtual address, or if you just want your presence and a registered address in Singapore, then your service provider would be happy to help you with that. So again, it's a very specific question depending upon your needs. Okay, if you want a full working office, where you want, what is that you do, all these things, so we'll be able to guide you when we know a little more in detail about the business. It's a very generic reply that I've given you in this case because it's very business specific. If you ask me for founders, I mean, you can go with virtual office, or you can ask your service provider to give you a registered office if you're really not based out of Singapore, and that's very cheap. It's not expensive.
I see a lot of questions coming from Singapore expansion point of view, and I'm truly liking that. Very much direct and practical questions that related to the structuring, legal compliance framework, and I'm really liking that. Next
Okay.
question is from Mr. Satyaranjan Patnaik, who is also our cohort startup, Ample
Okay.
Creatics. The
Yeah.
question is for incorporating any entity in Singapore, which was already incorporated in India, will all the procedural needs to be followed as per norms?
Okay, that's a very interesting question. I'm not sure what exactly you are trying to ask, but if I understand the question correctly, you want to know the procedural formalities of opening an entity in Singapore if you already have an existing entity in India. Is it that, is that the question?
Yeah, I think
Yes.
that's the question, that if entities in Singapore, India already incorporated, and if they want to incorporate in Singapore, will each and every procedural need to be followed as per norms,
Okay.
or there can be some, yeah,
No. So, see, we have to understand that Singapore, India have different frameworks, right? We have different frameworks, we have different legal and compliance framework. So, your question, so procedural formalities, yes, there's no no leeway given in terms of compliance, that if you have an existing entity, then it's okay, we won't bother you for compliances to be, all compliances to be followed in Singapore. No, that doesn't work. However, this question would be more relevant from a structure perspective, right? Whether you want a holding subsidiary or you want common directors and shareholders, and how you want to structure this business here in Singapore. What you can do is, as far as compliances are concerned, you have to do the compliances from structure point of view. Understand what is your reason to expand in this region. Okay, and then of course we can guide you better when we talk more about this, right, on what basically you want to know. But I hope I was able to answer your question, that there's no leeway given in the compliance. You have to follow complete compliance procedure. Nothing, we cannot do away with compliances.
thank you. Next is from Bakha Agrawal. How does Singapore compare to other Asian countries in terms of ease of opening an entity and doing business?
Okay, Bharka, I've been in Singapore and practicing in Singapore for almost 10 years now, and I have been part of different organizations. I've done business across. I would like to say Singapore is the easiest place to set up an entity and run businesses here, but the only thing is you have to be super compliant. And that's what Singapore stands for. They have very easy compliances, they have very smooth structuring, they have very smooth processes, and by far it is the easiest place to do your business for running your entity and expanding across, no doubt.
Thank you. Next question is from Bakha Agrawal. Which is the best business structure to adopt while setting up a business entity in Singapore?
Depends upon nature of your work, where are you based, and the number of people you have in your business. It see, you can if you are based out of India, you can choose LLP or a PTE. We personally, if you ask me, I always suggest PTE structure, because it is the cleanest and simplest structure. Compliances are not very difficult, and it's easy to enter and exit. So, in my opinion, if you ask me, my personal preference is always set up a PTE limited. Cleanest way to set up, run, and exit.
Thank you. Next question is from Mr. Sandeep, who is also our cohort founder, StratSync.ai. The question is, what's the most effective way to structure founders' equity when the founding team is split between India and Singapore, given cross-border legal and tax considerations?
So, first question, effective way to structure founders' equity. What do you mean by that? Because founders' equity is not based upon the tax structure here, right? Is it a corporate that you're planning, that you want to have in your business? What is the, where are the directors and shareholders based? So this question cannot be answered without having more information. I need to know more about the founders. Where are they based? Their nationalities. How do you want to run? What is the split? But technically, if you ask me, the structure really depends upon how you want to structure it. The equity should be decided not on the terms of cross-border legal and tax considerations, but on the basis of what is the role of each founder in the business, how much comfortable you are with the founders, how do you want to structure this, because rest of the things can be actually managed between the two countries. As far as your cross-border legal and tax considerations are concerned, I need more information from you on your founders, as I said before I give you any answer to this question. So
Jagriti,
maybe we
so
can connect separately. Yeah.
yeah, so there are some messages or Q&A. There are message asking for the contact details. Maybe if you could share your screen again where you had that Calendly
Yeah,
link and
sure,
your
sure. Why
contact
not?
details. So we
Mhm.
can keep that live while we have this Q&A. So I think people get
Oh, sure.
more time to
Yeah,
set up time
perfect.
and
Just
spend.
let me 1 second. We can, this is it. You can fix up a time with us, no problem. Okay, which is, you, wait. Let me,
Yes, so the number and
the last
link is
one.
there.
Yeah. So Calendly link is there. If you want my number, my number is also available here. You can get in touch with me anytime you want. We'd be happy to fix up a 30-minute call with you. Happy to help you guys along. No problem at all. Okay.
Onto the Sandeep's question, just to add thing that the context in the Sandeep question is that the founding team is split between India and Singapore. So there is a team, some are in India and some are in Singapore.
No, so that they need to discuss first. No, what is the split that they're looking for first and foremost? That's the first
So
thing.
it can be taken offline
It can be
to
taken
discuss that,
offline.
to be
Exactly.
very specific of the case.
Right. That's exactly what I was saying. It's a very case specific question. We need to understand the dynamics first, and then we'd be able to answer this question. Not without, there's certain questions which we need to know, which needs to be answered before we answer this one.
Before we get to that. Okay,
Yeah.
with that, I think this question is done. Then, Mr. Akshay, in terms of the contact details, you have Jagriti's contact details there. Happy to share my contact detail as well. Maybe I can read out my number. I don't have a slide, but feel free to reach out to me. Or easiest way is just write to me fpnaguy@gmail.com.
Well,
So that's my email ID. Maybe if you, Jagriti, can write my email ID on the deck, FPNA, Financial
would
Planning and
be,
Analysis.
yeah. No, no, just I won't have, because I'm unable to see the screen because I'm sharing mine. Maybe Kushal, can you WhatsApp to me?
I will type
No
to you,
worries.
Chal.
All
I'm
right.
typing.
Okay, you're typing it
All
there.
right,
Okay.
great. Thank
So
you.
this
Thank
is
you.
FPNA guy, GUY@gmail.com.
And this is from who?
This is from Akshay.
Okay.
So this is answered. Yeah, and then I think all the participants can see the message that Pratima ji has typed. So this is good. With that, I think there are no more questions. We'll wait for say 30 more seconds if there are any more questions before we conclude and we get to the next session, the times and dates and all. So we'll just wait 30 more seconds if there are any more Q&A. We still have a little time left for the masterclass.
Guys, if you don't have questions for me, I'll start asking questions. So please ask questions if you have any.
I think the presentation has been that clear, Jagriti, and then the remaining questions has already answered. And I think that definitely makes sense that this is still, this particular question is very much context and situation specific. And that's
Right.
where the Calendly and WhatsApp, I think, will come in handy to go more deep dive onto very particular questions. So as we conclude this insightful masterclass on behalf of the NextLeap 2025. Special thanks to CA Jagariti Mathur for leading this session today and sharing the real life anecdotes and sharing. My sincere gratitude to CA Pratima for managing the backend of this entire webinar. Thank you very much, Pratima ji, for doing that. I would also like to express my gratitude to BeyondSeed and committee.
So sorry to interrupt you, Kushal. I think we have one more question.
Yes, we have one more. Can you throw some lights on the initial costs involved for setting up an entity in Singapore?
Okay, Barka. So initial cost, right? It can cost you anywhere from I would say complete end-to-end services from 1,000 to 5,000 SGD, depending upon what services you require. It involves your nominee director and other costs and everything. But again, this question we can take separately, and we can see how best we can help you with this request and questions and all. Yeah, but yeah, that's a rough range.
Thank you. I would continue. I
Sorry
would
to bother.
like to express our gratitude to BeyondSeed and Committee on MSME and Startup of ICI for helping bring this initiative to life and for your support and guidance. A special word of thanks to CPA Australia for their partnership and sponsorship. And finally, a warm thank you to all the mentors, founders, and participants who joined today. Our next masterclass is on October 13th on the topic financial planning for early age startups. That's scheduled, if I'm not wrong, let me just quickly check that. That's scheduled at 4 p.m. Singapore time and 4 p.m. India time and 6:30 p.m. Singapore time on October 13th. Topic is on financial planning for early stage startups. So we look forward to seeing you all again in our upcoming masterclass. Thank you very much, everyone, for joining. There is one more question. Oh, that's the thank you note from Baka. Thank you, Baka, again, and thank you all the participants and Q&A. It was a great session with you all today, and being so engaging participants. Thank you, Pratima, once again. Thank you, Jagriti.
Thank you, guys. Thank you so much.
Thank you, Kushal. Thanks to you too.
Okay.
Thank you. Bye bye.
Bye bye.